Sub YouTube, it's been a hot minute since I last posted a YouTube video. It's been about 4 months, and ever since, in the last 4 months, I've definitely evolved as a trader. I would like to say my whole entire model and my structure, everything that I used to do, everything that I used to trade is completely different now. I did want to make a trade recap for yesterday, which is Friday, July 17th. There's a lot of controversy on this trading day, and especially on the trade that I took. A lot of ICT traders said it's a pattern trade, and there's like a whole rave on Instagram about it, but it was pretty funny. Anyways, I'm going to take you into the chart now. So this is the it's a chart. This is the 9:30 open of Friday, July 17th. So I want to make a recap on this one because it kind of shows you my new framework and how I trade now. Before, I used to take break and retest trades off of session highs and lows. So if I just remove everything here and just show what I would take on my old model coming into this New York AM, I think I would wait. I'd probably wait for a break and retest of this structure down here. So as soon as we sweep out this London low, I would wait for a retest above it to enter more shorts for continuations, because continuations have room power. And if it gets blown through like that, then I think I just simply enter longs, wait for retest for longs. Probably enter around here somewhere. So on my old model, I probably entered around here because here we swept out the buy side liquidity after the newly created high has been swept. Failed to displace lower. Buying right here. Probably targeting something like Asia high or something, right? I'm not sure if that's realistic, but maybe the Asia low level right here. Or the swing high up here. Something around there. Stop at 525 points. Let's see how this plays out. Man. Probably would have been break even already, but yeah, something like that. That would have been my old model. I'd wait for a retest on this for shorts. If I didn't get shorts, I'd probably go in long. My new model, I use auction market theory and standard deviation. So I'm going to put in a volume profile and a volume weighted average price. So if I go back here, there's a trade I want to show you and how I took it. So over the past couple of months, I really learned to analyze the markets a lot better and kind of consider the auction more and how and why we're moving with options flow and gamma levels and stuff like that. But I feel like last Friday was really clear on where the market was moving and where you can kind of get buy-in and where we keep on running. So obviously this is the start of the new session open, the new day. 6 o'clock. This is the hourly time frame. We just wanted to run straight down from here, right? Price just straight up was just on a downtrend. And what happened here was, if you notice, price was respecting the first and second standard deviation levels below the VWAP. So this kind of tells us, hey, we're not looking for mean reversion trades. We're looking for expansion trades, mean expansion trades, because price isn't reclaiming above the VWAP and we're not respecting anything around fair value in this. So if I were to draw a volume profile from, let's say I want a daily volume profile, which is what I usually use, this would practically be useless. Why? Because this is all trending liquidity. This is a trending auction. This is a trending market. Where volume profiles really shine, they'd be shining in somewhere like here. where you can clearly see where, okay, we have a value area high, value area low, and a point of control. And that aligns with actually the VWAP in this session, so you can kind of take trades around the extremes. Like we can see here, price tapped into the second standard deviation level as well as blowing past the value area high. We had a mean reversion trade back to the VWAP. We had a reaction at this point, retested the value area high, then we drew lower to take out further low liquidity, and then we transitioned into an expansion market. The reason why I bring this up is because what I just explained is a total opposite of what is going on in this market, what happened last Friday. In this market, we're just clearly trending. We're not rotating around the VWAP. We are respecting the standard deviation 1 and 2 below the VWAP as, you know, as your new value areas. And that's how, you know, I was kind of thinking about it going into this trading day. So if you go into the 1 minute time frame, I skip probably 3 minutes ahead to market open. Here we have market open right here. Boom. So now because I know that overnight price was just respecting and tapping into this first standard deviation level below the VWAP, I kind of had an insight that, hey, if we don't break above this, above the first standard deviation level right here, then we're not going to be getting expansion above. And if it doesn't accept up here, we're not going to be trying to sweep out and target all this resting liquidity above. So I always draw a volume profile, no matter what, just so I can kind of see where, you know, where participants like to exchange. And so in this case, because we are already trending, I saw that we tapped into this first standard deviation level, and this is now acting as a value area low. Why? Because fair value would be all up here in between the VWAP and the two first standard deviation levels. And if we were bouncing in between this, okay, this would be fair value, right? Price is rejecting away from fair value, so when price would try to return into fair value, but then immediately rejects it, which is what's going to happen right here. Okay, we're testing into it, we're manipulating it. Then we get extreme displacement below. So I actually had an earlier entry when I was actually trading the session. I had an entry about right here on this candle, just simply targeting the value area low of the session, taking about 62 points, and I banged that pretty easily. So I'm gonna sell in right here. I'll put a limit order actually. I'll put a limit order right here, targeting the value area low, stop at 25 points, because I've come to find out that if your trade is invalidated past 25 points, it's usually already invalidated at that point. If price displaces that much higher, then you're probably going to get stopped out. And it missed my entry by freaking, I don't even know. Hold on. I don't ever edit my videos, so sometimes I have technical problems like this. But yeah, let's just go back. I'll put a stop there instead. $25 points. There we go. Then we're in right there. We are not in right there. Okay. Here we go. All right. You know what? Screw it. We're just going to go in with the market. It's fine. Targeting the value area low. Stop at 25 points. I know this is a little bit larger than 25 points, but my original entry was a bit higher than this. And it just ran. Yeah, full TP and like Literally one candle. Pretty solid. The way I took this trade was because overnight we were just respecting structure, expanding down. And so we came back up to try to manipulate back into fair value. We got rejected. And I know a lot of ICT traders will say, okay, well, we just swept out equal highs. Something like that, right? And now, because this is a sponsored fair value, inverse fair value gap going back down, we can trade it. Or a lot of people also said that because we didn't take out the 30-minute, where is it? Because we didn't manipulate into the 30-minute, that this trade is invalid. Something like that, right? Which means we had, if people were to actually believe in this move, they want to see a manipulation higher because we had targets higher before we moved lower. So people would say, hey, this is actually just a retrace. But in my model and the way I read the auction in the market, this is not just a retrace, this is a full move, especially with that type of displacement. If you see something like this, a move is probably true, unless the market's just like super volatile that day, in which a volatility index will probably help you. And that just ran down. And then what's interesting about what happens here is that we actually did manipulate a monthly low. So if we go into the monthly, we can kind of see, hey, we just tapped into a monthly low around here, and so now we're distributing back up. So I do know a lot of people caught this move back up. I think this is actually PB Blake's mech model. A lot of people can say that, okay, we have accumulation, manipulation, distribution, right? Accumulation, manipulation, distribution. And then at this point, we tapped into the obvious drawn liquidity for today, which was a monthly fair value gap, which sponsored the move to go higher. And keep on running up. So as soon as we broke structure back to the upside, and we started disrespecting the first standard deviation band, and instead of wanting to come back down, we retraced back to the VWAP. That kind of tells you, hey, we're refusing to go back down, we're going to ride higher. This is also just like a mean reversion trade, meaning that once price hit this point on the value area from the daily profile coming from market open to 930, as soon as we re-enter this, and we retested it right here, actually it kind of shows you it wicks into the value area low, and we keep on riding higher, meaning that this is now a mean reversion trade. And because that filled out, we can take that mean reversion trade up into the VWAP or point of control. Either one works. So if we were to take that, okay, we are disrespecting this first standard deviation with displacement, and this isn't just manipulation because we are holding. As soon as you see this wick coming back down into the value area low, that's how you know, okay, we're rejecting away, which means that this is a failed bearish candle which just got flipped bullish, which is usually a good indicator that, hey, we are going to be riding higher than this, and we can target either the value area high or the VWAP for a mean reversion. I usually just like targeting the VWAP or point of control because of the fact that when we have super big trending ranges like this, unless the move is super strong, you know, I wouldn't really believe in it as much. And you know, through back testing, statistically you will have a high win rate through just targeting the point of control. So this would pass an eval entirely, just targeting the VWAP. Stop, 500 points, or wherever invalidation sits. So this would honestly, be well below the value area low for the daily profile. So if price completely reverses this super good bullish candle right here, then it's probably not a true move. And it didn't enter me. Okay. 1 second. Targeting the VWAP. If you want true invalidation and you're willing to risk more, then keep it below the standard deviation line, because this line will act as support. So this would most likely just be like a 1 to 3, but I usually just like keeping it at like a 1 to 6 if this move were to play out. I wish it didn't. No, I completely forgot to go back. Be buying right there. There we go, we entered. Very good wick right there. That's immediate profit. And then you can just write it up. Probably go break even right here. And then it just sends it to TP. So those are 2 trades you could have taken using auction market theory along with standard deviation bands. So the auction market theory kind of gives you a framework of where to look for true imbalance and value area extremes to either trade mean reversion or mean expansion. If price overnight on the higher time frame is trending low and is respecting some standard deviation bands, then this kind of tells you, hey, we're probably going to see reaction at the band, either at which is now the value area high on this first standard deviation, or the value area low on this second standard deviation band, if price is bouncing up and down between it all night, which just means that this is the new respected range. So now, this is the first move you could have caught, targeting, let's say, the second standard deviation band, which would be right here, at the point of entry. No, that should be lower. It'd be like right here. That'd be 160 points for you right there. And then as soon as price broke back into structure on this first standard deviation band level, in respect to price, we got a wick back in. Bearish candle flip bullish, which means that buy side strength is still there. Take it to the VWAP. You know what, I'm pretty sure, if you really wanted to, could have took it to the value area high too. That would have been a full TP. So that would have been a 309 point play. And if you notice, as soon as we hit this value area high, we start rotating back down. So we just hit this value area high, which is this white line right here, off of the 930 profile. We are now rejecting it. We manipulate back up into it. Now we're displacing lower. Accumulation, manipulation, distribution higher. Now as soon as we hit this value area extreme, as this is now the value area high, this is where price is in a low volume node, and where a low volume node basically means that price will move fast through this area, and it either accepts or rejects pretty fast. So if it accepts and you see it displacement back below, you see a break of structure of all this generated liquidity, a retest back into this accumulation zone. This means now that this level, which was once support, has now flipped bearish. So now you can write that down, taking shorts at this retest of this level, taking it to the VWAP, 100 points like that. So this model only works if you can read auction context pretty well, using a AMD framework or Power of 3, whatever you guys want to call it. I don't usually use it like that, but I just wanted to show you, for those people that do, how it can relate to auction market theory. accumulation manipulated distribution can relate to auction market theory, and you can use it in context with standard deviation bands. So those are 3 potential entries you could have had, and they all would have been, you know, probably A+. I don't know about this one as much, but this one is just straight rejection to prove mean reversion back below, and this will probably ride back down to this first standard deviation band. Or it's going to accumulate around the VWAP and rotate back up. Which it did. So price, try to prove below, could not. Broke structure back to the upside right here. We had all this accumulation on the VWAP. Price broke back above, and then we could take a long from right here, targeting the value area high again. Very simple stuff. You just don't want to get trapped in low probability markets, because when markets are super choppy and actually just not delivering, then you should not be taking a trade on those days. But if you can identify where there's a clear break of structure and where key levels actually are, then you'll be successful trading this model. And currently this model has a 75% win rate, 6 months worth of back-tested data. So yeah, I would say that this is how I trade now. I want to make a little trade recap. The only trade I actually took on this day was this first one. I hit a 1 and 2 RR. It was gonna be fun with just, you know, closing the charts that day. I literally hit TP in the first 3 minutes. I'm like, all right, I'm done. You know. But yeah, this is a little update on my new model. So if I were to actually call it something, I would call it something like auction market theory tied into standard deviation bands. The framework behind this and the entry confirmations are all ICT based, so it was a pretty easy transition for me, going from trading break and retest of session highs and lows to now implementing auction market theory and standard deviation. And I think if I were to have any entry trigger, it would be manipulation of a higher time frame. So this could be like, you know, a 4 hour, a 1 hour, or a value area high / value area low, or standard deviation bands 1 to 2. So those would be that would be what I'd be looking for. Trading this model, either a high time for manipulation, price reaches a value area high or value area low, or the standard deviation band 1 or 2. And you really have to think about it in what kind of market, or what kind of auction are we in right now? Are we trending or mean reversing? Are we which also just means, are we respecting fair value, or are we in price discovery? If you can easily identify that and come into the market, not being confused on what we're actually doing, then your key levels will most likely work. I believe that these are the only two questions you really need to ask coming into the market. Are we respecting fair value, or are we in price discovery? Are we trending, or are we consolidating? There are many given examples of this on my TikTok, on my Instagram, but I just wanted to come on here and make a video about it because I'm pretty sure last time I posted I had a completely different model. I was trading completely different, but now I do have I kind of want to say it's an order flow model, because instead of pairing it along with ICT, you would usually pair auction market theory along with order flow so that you can actually see where absorption is hitting and verify that your key levels are actually working. So if we see a bunch of absorption and we see a delta flip, or if you use gamma levels, so gex levels, if you see like put walls and call walls to see where your actual key levels are along with your auction market theory framework and order flow confirmation for your entry, then I think that's all you really need. But for me, I'm just strictly trading auction market theory times standard deviation, and then my entry trigger would probably just be like a IFVG coming back into fair value, which means it would be like mean reversing with displacement, which is the same as like a delta flip. Basically, that's how I like to think about it. So yeah, I'll probably make a video about this model, but I just kind of want to go over towards Friday's recap. I ended up taking the short. It's a pretty good short, just targeting the value area low of that volume profile, and we end up smacking full TP. So very nice. A low 1 to 2. I didn't even risk that much high. That's the great thing about this model, is that your entry is already pretty good, because as soon as you see that confirmation of displacement back into range, or the retest of fair value and displacement away, that's how you know, okay, we're either expanding or we are mean reversing. Are we respecting fair value, or are we in price discovery? And, I doubt anybody watches these videos, because I'm not a big shot name in the trading community, and I'm still working towards being a better trader myself. But this is a little thing that I would like to share. My credentials, I passed like so many freaking evals by now, but I'm still not net profitable, which is kind of crazy, right? I've been doing this shit for like 9 months. Passed over 6 lucid flex 50k evals, and yet I think my problem actually lies within my psychology and my risk management, and just not going on tilt when I see a fucking red day, So I can pass evals in like 1 to 2, 3 days, but trading fundeds is completely different from trading evals, because evals reward aggression and fast passing, because you do have a time limit before you get charged again, which most people don't want to get fucking charged again. Or just, if you're on lucid, then you don't want to waste your time on an eval when you could be working towards your winning days already and getting a payout. But I think my problem was I'm actually rushing the process and just trying to get a max allocation payout, which I don't really need. You don't need a max allocation payout. What you need is consistency and like home base hits and smaller size, and just walking away from those red days where maybe you got a stupid entry, or maybe you enter a position and you were too early and you just want to go back in, but you already lost twice in the day, and you already know, like, okay, you can find a winning trade in this market, but if you lose, your account's basically blown, right? So it's like 3 losses, 25 points, so 75 points on a mini. That's basically, with slippage, is basically, okay, your account's gone on an eval. So I guess that's kind of why people prefer to full port them or trade them within like 1 or 2 days, because they have that money. But if you don't have the money to keep on funding the evals, just practice consistency. Stay small even in the evals. It's okay to take 1 or 2 weeks. I wouldn't take longer than a month though, because you're gonna get rebuilt. At that point, just freaking blow the account, or just like cancel the subscription and buy a new one, for cheaper. But yeah, that's a little trade cap for July 17th and how my new model works. It's been a while since I upload on YouTube, so anyone who watches this video until the end, thank you for watching. I'll probably post more trade recaps in the future. Maybe I'll become a big name one day, I don't know. We'll have to see. But yeah, peace out, you guys.